So hello everybody and welcome to the 100th episode. I've never thought I'd make it this far. The 100th episode of Couchonomics with Arjun. Joining me all the way from Singapore is actually a guest who has been on the show previously. It's a gentleman who I refer to very fondly as Mr. FinTech himself. His name is Sopnendu Mohanty. Sopnendu is the chair of Elevandi.
I told my son to be inspired by you, and I told him, you got to get to 100 if you have to make it a mark. Governance by definition is centralized. You can't just avoid that. Yeah. I mean, there's nothing called decentralized governance. At least
that's the second soundbite I'll say.
Because today, if you look at the capital allocation to when you're building a innovation ecosystem, you need to have access to capital, which is, we call it patient capital, long-term capital. And this capital must be allocated not to few countries, but has to be globally distributed to every possible country where you see innovation has an opportunity to grow.
What is SFF going to be all about?
Well, I'm looking forward to the 10th year, which will be our big anniversary, and I'm sure we'll make a big deal out of it. This year is quite interesting.
So hello everybody and welcome to the 100th episode. I've never thought I'd make it this far. The 100th episode of Couchonomics with Arjun. Joining me or beaming in all the way from Singapore is actually a guest who has been on the show previously. I think, if I'm not wrong, it was in season 2, which was in the studio. It's a gentleman who I refer to very fondly as Mr. FinTech himself. His name is Sopnendu Mohanty. Sopnendu is the chair of Elevandi, and we'll get a little bit more into Elevandi later. In addition to that, he's also the chief fintech officer of the Monetary Authority of Singapore, which is the regulator, the financial regulator of Singapore, and has been, in sort of my humble opinion, the chief catalyst, which has turned Singapore into a fintech juggernaut. Having said that, Sops, if I may refer to you as Sops, welcome to the show.
Go ahead. Thank you. Thanks for having me on the 100th episode. What a long journey.
It is. Now. It has been a journey. It's been a fascinating one too, to be honest with you. I didn't know if I'd make it past 12. Then I thought maybe 25 was going to be enough. Now we're at 100. So
I told my son to be inspired by you, and I told him, you got to get to 100 if you have to make it a mark. He also runs a podcast. Just started a podcast.
Oh, that's excellent. Excellent. He can always call me and I can tell him everything I do wrong. I don't know about anything I do well. But Sops, thanks for making it. I'm cognizant of time. We have about sort of 40, 45 minutes. I think there are a few things I do want to cover. I want to start off initially with a very inspiring sort of keynote, which Ravi Menon, who was till very recently the CEO of Monetary Authority of Singapore, and our part of the world, that's a governor of the regulatory body, made at the Point Zero Forum. I then want to talk a little bit about your vision in terms of, how does ecosystem enablement evolve in sort of today's day and time. And then last but not least, we do want to end with the last 5 minutes talking about the Singapore FinTech Festival, which is upon us, which again I refer to as the greatest fintech show on earth. So let's start with Ravi's views, right? He talked about a number of very important, if I may use the word, shifts, more than just trends, right? Which are going to define the future of fintech or financial services. He talked about digital assets. He talked about AI, sustainability, cross-border payments, and then even went into quantum. And I do want to spend a little bit of time in all of these. So let's kind of start about the maturation of the digital asset space, if I may sort of use that. Your views, right? You'd spoken about it in the last episode when you were here in Dubai. Where are you on it? How are you seeing the world evolve?
Sure. Well, good we start with digital asset, because always when you talk to any regulator, this becomes a little bit of a topic which we got to ensure that the right direction is set, because this market went through a lot of things. If you look at good and bad, if you want to take the good out of this market, I tend to look at it in 3 different buckets. There's a digital money, and there's a digital assets, and then there is infrastructure, or the digital infrastructure, not in the digital public infrastructure way we know, in the context of on the tokenized asset and digital asset, in that context, the infrastructure. from a MAS perspective, from a Singapore perspective, from most central banking perspective, a lot of work has gone in the digital money side. And you would have seen so many projects on CBDC, so many projects on tokenized deposits, which the banks can play a role here. If I take the digital money space, as Ravi Menon in his speech typically articulates, he talks about four kind of money. He talks about the central bank money, where the digital asset avatar of that is in retail CBDC and wholesale CBDC. And then he talks about banks' ability to issue a tokenized form of the money. And he talks about tokenized deposits. And there is a space for, which is not a traditional money in the classic definition, called stablecoin, well-regulated stablecoin, where it's backed by high-value assets and including currency. And that's the stablecoin, but regulated. And we all been consistently talking about there's nothing beyond this. And you can understand what is beyond this, which excites the market, but not to regulators and people who want to have a responsible financial systems. So that's where the money has evolved in the digital money side. Now, with those kind of money we have in the market, which is supported by a central bank, I think we have the necessary currency to do the innovation we want to do on the digital asset side. So let's talk about digital asset. Here, actually, it's a very open space. You can tokenize traditional financial assets. You can tokenize non-financial assets, and then you can transact those assets between 2 points or two buyer and a seller using smart contract. And there is a word called DeFi, which we don't tend to use, but we use as a broader tokenized asset, because to trade this asset, you need a smart contract. And that's how we see this future of financial sector, where that's how assets will be tokenized and how it will be transferred between two parties. Now, on top of that, you got to have a network on which the assets are moving. I think there is a need to think about some kind of infrastructure where this asset can be created and transacted. And to answer that question, MAS has started a project called GL1, Global Layer 1. And there's also a exciting project with BIS has started with Nandan Nilekani and his team called Finternet. And those are the infrastructure or the network on which such asset can be created, transacted, and that becomes kind of a future of financial infrastructure. And then you add all the three pieces. You add the money, the digital assets, and the network, which is trusted. And together, they makes the future of financial system in terms of how the assets will look in the future, which is digital asset.
Fair enough. So beckons a lot of questions. Feel free to answer them, but I will ask a question, right? And I'm going to come to digital money in a second, because I do want to talk a little bit about cross-border payments, which has been, an agenda that, a number of forums, including yours, you yourself have been driving. How do you actually, so I get all this digital asset stuff, we get the infrastructure stuff. The reality of this is we still exist in traditional finance, right? That's kind of the vast majority of the globe's economy. How do you see the two of these sort of come together in a manner that is, if I may use the word, elegant? Because I think, we're kind of creating these two worlds. It's actually got, they dress differently, they talk differently, they speak differently. How do you see this coming together in a manner that's harmonized?
Yeah, Arjun, I think I don't think we need to see it differently. I think the form factor has changed. It's not the principles have changed. It's still regulated entities still have to comply to regulations. All the regulations related to know your customer, money laundering checks, consumer protection, market integrity, financial stability, all applies. What is changing is the form factor. So I don't see in that sense anything different in terms of from a regulatory perspective. Of course, the kind of risk it comes has changed. We've got to think those, but the principles apply. Now, we also want to ensure that these two market interoperate. And we can't be in a situation there's like a switch. So part of one project Singapore has pursued called Project Guardian. And in the Project Guardian, we do talk about what are the governing principles and the framework under which these two can coexist and cooperate and interoperate. So there are these evolving thoughts to allow this two kind of asset interchanging, because you can actually, in practice, exchange a CBDC with a cash. If you choose to, or use CBDCs to pay to a normal bank account, there are these examples available. So in a lot of pilots, India and China are doing, and you can see those examples there. So I think both will exist. The network on which a consumer will transact, the consumer may be holding a wallet where he has some money in this digital money form, some money in the traditional form, and they can be used interchangeably with the network to transact. A lot of good examples on the classic Visa MasterCard network. You can hear that digital wallet can be used to pay for transactions. So I think it is already happening, and I don't envisage a digital divide where some people are transacting purely on digital money and digital assets on a different network, and some are transacting on an existing network, which is the traditional bank account, credit card, merchant network, and buying and paying for goods. So they will coexist by design. I don't see any reason why it has to be separate, and I think that's where the future will go to.
Okay, so I conceptually totally buy into you. Here's my view. Please correct me, because I don't have the size of the brain most of you guys do, right? For this to happen, and for this digital divide not to happen, I think that's a very good what you said. The regulators need to come on a journey. There's got to be some level of regulatory harmonization. Again, some level. I'm not saying that everybody has to have the same regulation. With that, there's got to be infrastructure harmonization, right? Because an infrastructure does come at a considerable amount of cost. Some countries can afford to take the step forward. And I do think a lot of this infrastructure will be built through sort of public-private partnerships, right? Because if you make it too commercial, you run the risk of these sort of closed-loop systems coming up, right? If you make it too government-led, then there is an element that the private sector might say, we need to be, we don't want to be grandfathered or, watched into it. And then the third part is that the wider economy needs to sort of come along, right? Yes. I'll give an example. Tokenization of real-world assets, real estate, for example, right? Huge opportunity, trillions and trillions. I read reports with more trillions in it than it is. But that's a whole ecosystem moving, right? Real estate has to move. The real estate regulator has to move. So what's your call to action? I'm not asking you to solve the problem here. So what is, from your vantage point as Chief FinTech Officer of one of the most progressive countries in the world, right? What's your call to action for the three different component parts that I've just outlined: infrastructure developers, regulators, and I guess the private participants? How do we all come along on this journey at a sort of equal sort of pace?
Well, part of the thing is that my own sense is that majority of this concept have been experimented already. You look around the world, almost every regulator is doing some experiment, whether in CBDC or use case, especially on the payment side, or a digital asset. Some experiment are going. I think all the experiments are consistently coming out with some good outcome. What needs to be done is to productionalize some of these ideas in real world. And it can only start with the first step, which is introducing at a scale the form of money you require to transact these assets. I think that's step one. Step two, I think is almost, I don't think it's a sequential step, but you can still go ahead and this is where private sector can come and start tokenizing the assets, and they can demonstrate how these are efficiently transacted in the market. And today there are many examples from UBS, DBS, JP Morgan, all are doing very interesting kind of pilot stroke production grade experiments in the market. So all this have to come into a scaled execution as a call to action. But my biggest call to action, Arjun, would be we got to solve the network problem. It is hard to envisage that there'll be that openness to transact these assets on network which are privately managed. So I think there's a need to think about or it's a public chain, but more in a way it's a consortium. So you got to solve that problem, and that's the reason I'm saying that the role GL1, Global Layer 1, and Finternet will play in this space is critical. Or any examples like that. Getting the network right, in well governed, well managed, and well understood would be the key to succeeding in this space. So if I have to summarize, I think the base work has been done. The base work for digital money is done. People understand now better. Regulators know how to deal with it. The base understanding of digital asset is well understood by the private sector. Banks are all experimenting. They've got all the muscle memory to do it. And the last piece to solve is the network. I think that's where my call to action will be: get the network right.
Perfect. I'm going to switch to the convergence of digital money and cross-border payments, and I'm not talking just about remittances between you and me, but I'm talking about unlocking the opportunity for the small, medium enterprises, businesses becoming increasingly global, if I may say so, right? So I was reading an interesting report 2 days ago, which is sort of the G20 initiative on cross-border payments. I'm sure you're fully aware of it. We need to make payments faster, we need to make them more transparent, and we need to address the cost, right? And I don't know, averages are going up to about 11, 12% in some parts of the world. Some people are saying we've already got it down to 3%. I'm not going to particularly seek out a question in terms of speed and transparency and speed. There's an interoperability challenge. I'm going to talk about cost, because I think that where the pain of the lack of interoperability that exists is in the cost, in my humble opinion, right? And you'll correct me as I'm wrong. The way I see it is, a number of players say that we're solving for cross-border payments. So we have public infrastructure coming up, and they're saying, well, we can connect public infrastructure and payments can get very, very quick, efficient. Well, that's one way of doing it. You've got all the new age players, I guess from the blockchain era, who say that we're building these so-called closed loop systems, but they're multi-rail, but then there's tremendous cost, gas fees, and so on and so forth to operate multi-rail. How do you see, because in my humble opinion, I get quite, if I say the word, upset, because the rhetoric is all there, right? And I think there's more rhetoric than solving the real problem, which is interoperability and cost. Where do you see this going, again, from your vantage position?
Very good question. I would say that you're not that wrong in many of your observation. It is anyway very hard to get within the country things right, because what India has done, Brazil has done, Singapore has done, and many ASEAN countries I know have done, get the national infrastructure right, the payment rails, so that at least the domestic payments between two parties, two accounts, or paying to a merchant is actually simplified and at a speed, at a cost structure which is the right one to do. So I think that is past us. I don't think we need to wait for a great example. You look at Brazil Pix and India Aadhaar UPI, great story. Singapore Pay now, great story. I mean, we got the pricing right, we got the efficiency right, we got the governance right, and every now and then you can see some regulatory intervention are coming to ensure better consumer protection from fraud, scams, and cyber issues. So I think that's great story. The question you're asking, how do we connect this across the border? And to solve that, there are a few things we have to deal with. First thing, we got to ensure that this payment system we are developing in each market are to a global standard, ISO standards, and to ensure they can actually talk to each other when they're ready to connect. So that's the technology part. So get the standards and adopt the latest standards, and then things should technically be easier to connect. The second aspect is policy alignment, and that's where the biggest work lies. How to ensure that the policies which govern cross-border payments are consistent across the market. It can be as simple as how do we settle disputes? How do we settle cyber breaches? How to ensure that when there's certain payments, certain transfers, So any dispute can be settled. So there are a whole set of policies, procedures, SLS agreement which have been settled between multiple jurisdictions to get it right. So that's the big chunk of the work, where lies a lot of the cost. The third aspect is FX, and that's the most difficult part, because today every currency today have to go through the dollar route for right reason. Dollar is the most interoperable currency. That's the most efficient way to move this two different currencies from two different market cross-border. Now, my opinion is that we don't have to solve all the problems same time. I think we can start with what Singapore has done, bilaterally started connecting to a few markets, understand the process, understand the challenges of connecting those markets across the border or across different jurisdiction, and build the necessary, I would say, the resilience in building such network when connecting across the border. The good news here is that BIS has taken this Singapore learning with Thailand, with Malaysia, with India, and started this project called Nexus. Mm-hmm. And in that project, where the ASEAN countries plus some other country will come together and set up a framework, a specification by which different countries can connect their respective domestic network. In the process of connecting the network, there will be a lot of efficiency gain in especially when moving money across the border. And now, when does that becomes globally scalable? I think we got to wait for that process, but I think there's work has started through Nexus, which is a lot of great news there. The one which I'm not sure, Arjun, is the FX component. I think that is much more complicated. It's a market liquidity, the prices, and there are a whole set of challenges there. I would assume that we should think about cross-border transfers, not trying to solve every transfer going across the border, but start segmenting on where we think the biggest impact would be. And in my sense, that we should focus on low-value remittance, especially for migrant workers when they cross the border and they work in different market, sending home back remittances. These are not high-value transactions, but if we can get it right, get the transfer at the cheapest way and the fastest way, you are solving a very impactful financial inclusion problem. And if we can segment ourselves by trying to solve by different chunks of segment of customers, then we can be more impactful, because the policies we need to design to settle small value transfer can be far more flexible, and we have a lot of opportunity to fine tune the policy so that it becomes easier and cheaper to move money, especially you are sending money $100, $200 across the border. So I think segmenting the focus could help us to achieve efficiency. And I still believe not every transaction has to move at the speed of light. You don't want a large value transfer on a click of a button crossing the country. It has other consequences. But small value, you are responding to a family emergencies, sending money back home. We got to work together and fix that problem. And also some low-income countries where small values moving between different countries, we can look at it. I think that's where my thought is around cross-border payment.
I totally agree with you. but let me try and extend this question, right? It's my favorite bugbear. It doesn't go anywhere, but stays my bugbear. I love the idea of segmenting. I think that is the way forward, right? But you appreciate this more than anybody else, that the C2B payments as a part of the wider payments it's a very small percentage, right? It's about 4 to 5%, and maybe the number's wrong, but I think B2B is like 20x, if not more. And even if in that B2B we look at the small and medium enterprises, which are increasingly using cross-border, and I was earlier this week speaking to our common friend Sitoyo at M-Pesa, right? And obviously they're looking at small businesses. I personally think solving for them, which again is not huge transactions, right? These are small businesses. So maybe they're not $10, $50 transactions. Maybe they're $1,000, $5,000. There's actually a trickle-down effect too, because let's be honest, these are the same entities who employ nearly anywhere between 60 to 90% of those same consumers from whom you're trying to solve the problem for, right? Again, I'm sorry to put you on the spot. Should that not be the place where we should start this discussion rather than
in the smaller medium merchant side?
Yes.
Yeah, absolutely. I mean, that is given. I mean, when I talk of segmentation, I'm talking about individuals and small and medium enterprise, micro SMEs included. But let me tell you one thing, Arjun. I think we are appreciating the role a lot of fintechs are playing, especially payment fintechs are playing in the cross-border space. Irrespective of where the infrastructure lies, where the policy harmonization lies, there are hundreds of fintech today in the market who are operating with proper licenses, doing cross-border border remittances at a price point which is very attractive. So it's not a problem which has no solution. So fintechs have done it, but there are better ways to do it. All I'm trying to say that when it comes to merchant payments or a remittance, existing fintech companies are trying to done decent job.
Okay.
But when it comes to certain kind of currency basket, certain kind of conditions, it becomes more complicated. I'll also go further one step down. When it comes to merchant payments or tourist payments to different merchants in the point of sales terminal, I think largely it is operating quite well. What we are really talking about, account to account transfer, and there the complication is there are a lot of policies which requires a tick mark, KYC, AML safety checks. Would ensure that the beneficiaries are properly checked through. So there are a whole set of processes which has to be done efficiently in an automated way, and that can cause friction and hence can cause cost appreciation when you send money from two accounts across the border. So I think that's where.
No, I think we stop there. I think my view is very simple. Unless we don't get some level of sort of policy harmonization across these, key corridors, I do think we'll live with this problem. We'll just have to.
Yes, but I think on SME side, merchant side, I must give a lot of good marks to fintechs. They have done quite a decent job, and we tend not to appreciate that.
Them enough.
But I like to use your platform to say, if fintechs have done a fabulous job in the payment space and SME payment space, they have done a very good job. I think they have solved last part of the problem. I think the last mile issues which we are trying to solve from a public infrastructure perspective.
Perfect. I'm going to switch gears. We're going to talk about stuff we've never spoken in 100 episodes. I'm hoping we can. Quantum.
Okay. It's a complicated topic.
It is a complicated topic, and I think you're a better storyteller than most that I know. So please deconstruct quantum for us from where we sit today. Again, not seeing 20 years from today. Maybe it will take 20 years for it to happen. I personally think the speed of adoption of technology is so quick that we cannot see 20 years in the future. Again, I go back to Ravi's speech. He gave a significant amount of his time in that sort of keynote, talked about quantum. So how do you see quantum? How do you see it slowly trickling into the world of financial services? Where do you see the initial use cases impact being felt most?
Well, when you talk of quantum, the first thing comes to your head is some very super fast computers coming. I was educated. Answer is no. It is fast for a certain kind of use cases. It's not fast for everything. And that's something I learned very recently. So I think when you talk of quantum, I would say practically from a very pragmatic real world implication, the only single, I would say, real world work which has been created out of quantum coming in future is to fix the encryption vulnerability. And I think today, as we speak, last month or July, the standards are out of how to quantum proof your encryptions. I think that's a real issue. The vulnerability of our encryption standard when quantum comes, I think banks can, I think most of the financial sector are in the process of either understanding the implication or getting an inventory check done so that they can upgrade their encryption standards or design so that it is quantum proofed. I think that's a real serious work which has been created, and a lot of focus will be in that piece of work so that our encryption designs are future proof in that sense. So that's a very good outcome, real outcome, tangible outcome, We know the weakness, and banks are working with the technology company to fix that. That is whether quantum comes or not. That's the second part of the things to worry about. Now, the second bucket where we see a quantum as a useful tech to think about is an use case where we think there are certain limitation or certain limits we are hitting, especially on high speed, on complex trading spaces, where we got to look at a whole set of complex variables to make certain decisions. In that space, some experimentation can be done using existing whatever level of quantum hardware we have today. It's all early stage. There are a lot of companies who are offering on-cloud quantum services to use that facility to do this computing, but that's at a very early stage. So I would not go and indulge more because it's still an experimental stage of those use cases. But way I would frame this, I'll go back to the classic definition of Web3. When we talked about Web3, which is becoming a old-fashioned word now, it was supposed to be a super combination or tech stack combination of AI, distributed ledger technology, IoT devices, and then of course they added digital money after that. I think when quantum comes in, that will make that stack complete, both from a computing complexity, handling processes to all the other new tech stack, including AI. So whenever quantum comes, the Web3 will get its final shape, how it should look like, which has been a struggle till now. And I think that's I would see as a very good outcome if we can get it right in years to come. But at this point, our focus should be getting the encryption part done and continue experimenting on use cases. Very unique. You don't want to put every use case into this quantum computing discussion. Pick up complex products which requires very complex processing and get into the quantum ecosystem and see whether this can be solved in a better way. But it's still at a long way to get it right.
Okay, I'm going to ask you a question.
And by the way, I was in the 0.0 forum.
Yes.
I went to the IBM labs. By just looking at their quantum facility, I just felt like we are far somewhere. It's still a long way to go.
Yeah, and I know, but the word "long way" these days has become relative, right?
But in this case, I think Arjun, in case of quantum, it's not a classical computing thing. It will take a reasonable good time. I don't expect things to happen so quick in this space. If I'm wrong, let's get this clip viral then.
Yeah, no, I agree with you. That's a good idea. You're giving me a sound bite that I should hold on to. But, you brought Web3, right? And one of the tenets, I guess the primary tenets of Web3 was everything around decentralization, right? It was,
yes.
The world is going to... Everything I have seen ever since, whether it is CBDCs, whether it's public good initiatives, whether even if it is things like, quantum standards, payment standards, if anything, there is an element of more centralization, maybe at a policy level, less at an execution level. But having said that, even at an execution level, there's centralization, right? With the national payment infrastructure. Where do you see this centralization versus decentralization conversation head in terms of the narrative?
Well, that's a very difficult question. Our natural tendency is, if it is a regulated sector, governance by definition is centralized. You can't just avoid that. Yeah. I mean, there's nothing called decentralized governance. At least
that's the second soundbite I'll say.
So what really we're trying to decentralize is the tech processing part. Mm-hmm. And if for example, you don't need to have every data in one box to make a decision. Can the data stay where it is using the new encryption standards, all this new technology? We can process in a decentralized way. With IoT devices coming, not every data to sit in a big data lake and be processed. Mm-hmm. So I think what we should think when you come to decentralization is decentralize the tech layer. decentralize the data processing layer, decentralize some of the decision making in terms of system output. That would be more pertinent in this context. But when it comes to governance, you got to hold somebody accountable. You can't avoid that. So accountability always remains central to this. And when it comes to financial sector, which is regulated, I think sometimes we confuse decentralize with the governance and accountability. I think we as I can tell, at least from our perspective, we like smart contracts. We like two assets being settled without an intermediary in between. What I don't think we are comfortable with the idea that accountability is also decentralized with this thing. That's not work. So there is a need for governance, the need for some central construct to intervene, almost like what I'll say, what they call it, killer switch. If things go wrong, somebody has to
put the kill switch. Yep.
Yeah. So I think that's where I would try to nuance it.
Okay. So let's shift focus, right? I think Singapore as a nation, some of the vehicles which have come out of Monetary Authority of Singapore, including Elevandi and Singapore FinTech Festival, you as an individual spearheading the FinTech story for mass, obviously the collaboration, the cooperations that you guys have built with BIS and other, if I may say, ecosystem enablers. With the world shifting, right, and maybe we're from FinTech 1.0. Well, I'll say, the way I actually say is FinTech is dead, long live FinTech, because I think a lot of, at least my generation who grew up in the early stages of FinTech when it wasn't called, for us the world looks very, very different. Thankfully, we've adapted and evolved, and I guess we're still young enough to learn, so we're learning. How do you see the ecosystem enablement reimagined for whatever century we want to say, 22nd century?
Great question. I think I would say that we are in a cusp of rethinking, reimagining the way we think about building the ecosystem. And I will start with very fundamental need for an ecosystem is trusted information. And I can say with some certainty, our traditional primary source of information today is extremely complex, biased. The whole kind of issues from print media to television media to social media, every piece of information you hear, you got to bite yourself or pinch yourself to say, is that information correct? So we got to fix the information problem. I think the first thing to be reimagined is, where does knowledge get created and transmitted? And to me, the primary source is back to a classic, we talk to each other in a forum design. And I don't recommend here to have a large forum, but a decentralized, well spread out, well networked, well connected, a set of, I'll say, key spots in the global system where people are talking, discussing, roundtables, workshop, and the primary source of information is collected and then translated to a digital form and then sent across to the global audience. How to fix that trusted information layer by going back to basics in the information gathering, information exchange process. So that's one. Get the knowledge creation, information creation process right. The second part is that once you get that going, you got to ensure that you got to develop some mechanism by which every country in this whole construct have the right capabilities. How to ensure there is a way to go and develop those capabilities, not in the sense of developing new product, right policies, right level of skills upgrade, right level of digital platforms which help the market to scale faster. How to develop that capability piece is the second part of the ecosystem build-up. Now we got to attach to that the capital part. Because today, if you look at the capital allocation to when you're building a innovation ecosystem, you need to have access to capital, which is, we call it patient capital, long-term capital, And this capital must be allocated not to few countries, but has to be globally distributed to every possible country where you see innovation has an opportunity to grow. Create a capital with a catalyst capital with a long-term ability to invest for long-term, and direct the capital to Global South. And I'm using the word Global South with a lot of responsibility. Why? If you look at the future talent pipeline, a lot of this talent are going to come from Global South. Look at the declining birth rate around the world. There are a few places where you have next talent coming in. So you got to start shifting and hunting this talent from this new market. So I will try to stitch in the future construct of the ecosystem platforms. We got to figure out, get the 3 C's right: content, capabilities, and capital, and stitch it together and direct this ecosystem platform to Global South and ensure that that market is ready for the future growth. And if you can get all this thing nicely laid out, I think that will become the next, I'll say 2.0 or 3.0 design of our fintech ecosystem.
Okay, let me ask you a question. I theoretically completely agree with you. Capital, right?
Yes.
I'm assuming this is an assumption that this is both private and public capital coming together?
Yes. Yes.
How do you make private capital more patient?
If you give them a sense of confidence that this asset, let's look at the basics. So when I get an investor to look at an asset, suppose this asset is in a low income country, there's a lot of uncertainty, right? Mm-hmm. Now we got to ensure before the investor puts money in that asset, wherever it was created, that market has the right policy construct, has the right access to talent. They understand that sector quite well. So I talked about content and capabilities. This come before capital. So get the content and the capability right in the market, give an opportunity to the market to create new assets. Then you bring the capital. The capital moves to the right direction, and they have some certainty that with some sense of, I would say, the right framework, they can take a bet for a long period of time. Today, the challenge is it's just so much uncertainty. I mean, there are a lot of good ideas in emerging market. You just don't know 3 years from now whether investors are going to lose the money or they're going to find a way to exit. There's so much of challenges, and policy can change, which means that asset gets completely knocked off. Whole thing can go upside down. So how do we bring certainty to the market using that first 2 C's, content and capabilities? And that's where I believe the future lies in terms of direction to get more long-term capital.
Well, I'd love to have this conversation with some of the large PE VC players, because to be honest, they believe that imperfect information and their ability to their ability to interpret risk.
Yes, but I think we are talking of innovation, not of classic large investment. We're talking of very different class of assets here.
Okay. All right. So I'm sure this is going to be a theme at the SFF, which is
I'm hoping that we have something to talk to you all, and hopefully I'll have an opportunity to announce something in this line. So wait for it.
Okay. Well, so let's talk a little bit about SFF, right? SFF has been a very, very interesting story. I think it's our 9th edition this year. I think, so a decade ago it started. I remember the story you telling us that, you had envisaged something which would have had 500 people. You landed up with, 12,000, right? And so on and so forth. And it's come leap and bounds, right? So I don't think I want to measure the impact of an event by, 65,000 people. I think it's because I think why SFF stands out is, arguably, it takes the leadership from a content perspective. It takes the leadership from a perspective of bringing, I guess, the best minds in the world together. It also brings together the not so best minds in the world, because you need to kind of have a balanced world. It can't just be for all the technocrats and the smart guys to kind of hang out together, the guys and the girls to hang out. So it kind of answers a lot of that. This year, in your words, what is SFF going to be all about?
Well, while I'm looking forward to the 10th year, which will be our big anniversary, and I'm sure we'll make a big deal out of it. This year is quite interesting. Why? If my numbers are correct, somebody told me almost 90 countries are done with electing the new leaders. And the big election results will come right a couple of days before SFF starts. And everybody will watching that election, what happens there. India went through a new election, went to election process. A lot of countries in Asia went through election process. Japan just did a change. I cannot imagine my whole life that I'll be hosting a Singapore FinTech Festival right at the end point of all the election are done. I think the world will look for what is the impact of this change. Significant part of Singapore FinTech Festival 9th edition 2024 will be dedicated to understand the implication of the election on the future of financial sector when it comes to technology. It has got a strong impact because all the leaders who are coming are going to be around hopefully 5 to 10 years, at least 2 cycles. So very good timing to understand that impact. And I think this will be interesting for investors, to entrepreneurs, to banks, and to regulators to process whole set of change, geopolitics, and it has got a huge impact on this in this sector. So that will be, let's say, that's a significant part of the Singapore FinTech Festival narrative. We're also in an interesting time where we are talking about AI regulation almost becoming a everyday news. Now, we're going to start at SFF dissecting the impact of regulation on the actual growth of AI as a tech industry or a tech sector or a tech change, because that has without regulation, there's one way tech can move. With regulation, tech will move in a different direction. So we will spend a lot of time in understanding, dissecting the impact of regulation on AI, and how do we as a tech entrepreneur or a tech regulator think about helping this sector to adopt AI in a responsible way, and what is the path forward. And the last piece to my thinking, and when it comes to SFF this year, is an interesting challenge we are going to face. I'll not a challenge. I would say that with the lowering of interest rate, you are hearing every central bank, is the market will see liquidity open up. All the funding winters which we are going through, will it see a turn back? And this is an interesting time to see, with the interest rate trying to go down, is there opportunity for investor to be back with more liquidity and try to create the necessary momentum back for a growth of the sector, which will hope to go back, because every market fintech statistic you look is all going down in terms of funding.
Yep.
So we're in an interesting time. Geopolitics, AI regulation. Hopefully, this is the end of funding winter, and this is the spring. So spring of funding, end of job will be interesting time to host Singapore FinTech Festival. It's just by luck we're in the right time.
So Sops, you used the word spring, right? So this is my last question to you, right? And I'm very cognizant that you've already taken a lot of time. Climate is a big topic, both in terms of not just mitigation, but also adaptation, right? Increasingly, it's becoming clear that financial services, fintech, has a role to play. I'm cynical, both in terms of things like impact funds, which, to be honest with you, are just another way of greenwashing, right? Because most of them are, in my humble opinion, not impact. They still want outsized return on investments. They harbor around things like sustainability of climate and so on and so forth. Secondly, I don't know, most of the targets are going to be missed by a number of papers that are coming out. Financial services is trying to play a role. How do we really, really galvanize the financial services sector to start taking climate change as a topic which is serious, and because it is one of the themes of SFF this year, if I'm not wrong, right? Sustainability
Yes,
and
absolutely.
climate being part of it. So that's kind of my last question, because I do think that is, it's an existential question to sort of, humankind. It's not just about financial services. I don't know if you firstly agree with that.
No, it's a fair question, because large part of Singapore FinTech Festival this time also, I'll say large part because it is sprinkled across all the whether it's AI or whatever. We are almost taking climate commitment or climate tech into the Singapore FinTech Festival as a horizontal. Whether it's a capital allocation or that deploying technology or policies, that is almost like a non-negotiable part of the narrative here. Arjun, I'm a little more optimistic than you, because today, if you look at the capital we create in the market, the capital getting created, at least there is a sense of that we need to allocate capital for a change of or a transition plan. What we are doing, at least from our perspective, we are putting a lot of effort in putting platforms in the market, at least get the basic disclosure right. At least get the source of information right, or get the information to a state where it is standardized, it is consumable. And in my mind, there's no better sector than fintech sector to fix the problem. Why? Ultimately, all your climate behavior or climate activities or anything you do which can affect climate negatively or positively, there's a transaction, there's a payment transaction. We as fintech have the access to almost large part of the data which we can repurpose and create the right disclosure to create the right baseline. So we as a fintech ecosystem player have a responsibility and have an advantage to get the disclosure right. I'm going to bet on this. And that's where we will focus. Well, it is beyond our own ability to solve everything in the space. At least you, myself, and all of us who care for the sector, we can add one part of the value is get the tech right, get the disclosure right, and get out there for small, medium, large corporates to use these platforms, use this fintech to get the right data set. And from that point of time, or wherever we get it right, I think policymakers can come and do some fine tuning, hopefully get to the numbers we are looking for. I think that's where I would think where our role is, and how SFF in particular can stay focused on this sector.
No, I hope so too. Sops, I'd like to thank you. As I said, there's a funny side to all of this. That fact that I'm sitting here saying it's the 100th episode, I really can't sometimes believe. And actually, to be honest with you, it's been over a year since I had you in the studio. And I remember that evening, I think you were en route back to catching a flight to some corner of the world that you are. And I think we started at about 8 o'clock, and then you were being rushed out of the room because you were already late for the flight. But thank you again. It was great to sort of dialogue. I'm going to be seeing you. Well, I see you often enough for being someone who doesn't live in Singapore or accommodate or is in the same place. I will see you shortly at the Singapore FinTech Festival. I hope to sort of participate in whatever capacity I can.
Sure.
So with that, thank you.
And now, welcome to a Singapore FinTech Festival. I hope all your viewers are actually going to show up with us. And I'm again privileged to be your 100th episode again. And I hope you do more such episodes, and somebody can say, go and check out the 100th episode.
Well,
with that,
I'm sure they will.
Best of luck, and hope to see you soon.
See you soon. Thank you. So, ladies and gentlemen, that was Sopnendu Mohanty, who's the chairman of Elevandi and also the chief fintech officer with Monetary Authority of Singapore. With that, I'll say goodbye from the 100th episode, and I'll see you next week. Thank you.